The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone. How are we all doing? This is Neil Green again with you on the weekly webinar. Just like every week, every Wednesday at 3 p.m. We've been doing these webinars and we'll do these webinars. You know, it's going to always stay for free for you guys, talking about the events of the same week. Just want to do, first of all, I would like to welcome you guys from the iTrader.com Facebook page. All right, welcome to the live webinar. And it's the first time that you're joining us, so I hope you enjoy this webinar. I've been doing this webinar. You can register through the website or listen to us on Facebook. Been doing this webinar since, I guess, forever, but I will do these webinars every Wednesday at 3 p.m. at GMT time, which is 3 p.m. London time. And we talk about the events of the same week. And I just want to do a technical check before I start, see that you can hear me, hear my voice and see the screen. All right, so you have a chat window. You guys that are in the webinar through the website, you have a chat window. So if there's any questions you have during the webinar, of course, you can write me. I'll try to answer your question in between. Of course, I'm going to leave some time for Q&A sessions, questions and answers at the end of the webinar. Just write something down, write me down that you can see the screen, hear my voice, that we don't have any technical problems just before I start. All right. I see some new names here. I see some familiar names as well. I would like to thank you. Meanwhile, just write me yes or something on the chat window that I'll know that you can hear me. I would like to thank you for all the emails that I received during the week. Okay, I try to answer all of them, but you know it's pretty hard since you a few hundreds every webinar. So you know I'm doing the best I can in order to answer all your questions. And of course, you guys that wrote me the thank you emails for the last trading during the earnings season that just ended. You're welcome, guys. And a lot of things going on in the US market right now. So just write me down on your window that you can hear me, that you can hear me and see the screen. Supposed to see our homepage, iTrader.com. Are we good? We good, guys? Can we start? Okay, if you have any questions, all right, just use this chat window. Okay? Just write me down and I'll try to answer your questions. All right, let's go on. So what are we going to talk about today? Actually, right now, the event that I'm going to talk about is taking place right now in the market. I'm going to show you the reaction of the market. And let's start. All right, we're going to talk about the CPI and Janet Yellen that is just testifying right now. The head of the Fed, the American Central Bank. All right, let's start. All right, first of all, CPI. CPI stands for Consumer Price Index. Okay, it says will be published because I made it in the morning, but it was published today at 1:30 GMT time. So we're talking about 1 hour and a half ago. Okay, I'm going to show you the results. CPI actually covers the change in the price of a basket of goods, all right? Which means if we have a higher CPI, it means inflation is higher, means everything is more expensive for US customers, and it gives us the index, the change in the price of baskets of goods, all right? It is the best indicator for inflation. Okay, I don't know if you remember on the past webinars we talked about the goal of inflation 2% in the United States, which the Americans reached it already. And it's a huge, I mean, it's the best indicator for inflation because, of course, if everything is more expensive, we expect, you know, inflation, which means that inflation is higher. Okay, if everything is more expensive, inflation goes up. And then we're going to have expectations for the rate decision. Now, the expected CPI number today was 0.3%, okay, up. And core CPI is 0.2. Core CPI, by the way, is mostly excludes the change in the price of oil. Okay, so one of them is with the price of oil, and one of them is not. And the Federal Reserve uses two indicators in order to decide about rates in general. Oh, just to show you, I want to show you the results. So you can go to Forex Factory or investing.com or whatever website you like in order to find this information, okay? I'm just showing you about an hour and a half ago. Look at the CPI, look at all the numbers, you know, all the numbers, okay? Looking at the CPI, expected to be 0.3, was 0.6%, all right? Double more than what we expected. It's all green, which is great. It's great news. I mean, not such a great news for inflation, but great news for the currency, for the US dollar. And looking at the core CPI, you can see it was 0.3 rather than the forecast that it was 0.2. Okay, you want to see the reaction of the market? Look at the reaction. This is the US dollar in this case versus the Japanese yen. The CPI took place right here, you see, at 1:30 GMT time, and you can see that the US dollar got stronger. We're talking about from 114.51 to 114.80. We're talking about more than 30 pips. Okay, went up and then came the correction. Okay, so you see the influence of this information, of this great information coming in from the United States on the market. Back to the PowerPoint. So the Federal Reserve uses two indicators in order to decide about rates. Okay, just to give you a general picture about the interest rate decision in the United States. After the big crisis of the subprime 2008, you remember the big crisis in the world, the market crashed down, and we talked about it, I think 2 webinars ago, about the reasons and so on. But the main thing was that interest rate went all the way down to 0.25% and stayed the same way for about a decade, all right? And it was on December 16th of 2015 that the Fed and Janet Yellen, the head of the Fed, they decided to raise interest rate for the first time after, we're talking about 2015 to 2008, I'm talking about after 7 years, from 0.25% to 0.5%. And then interest rate went up again on December 14th of 2016, so we're talking about 2 months ago, from 0.5% to 0.75%, right? The thing is, the dollar even got even more stronger than that after Janet Yellen talked about the fact that that actually we all expected interest rate to go up on 2017, which is now 2 times. And Janet Yellen, on the press conference 30 minutes after the interest rate decision, she said that they expect the interest rate to go up 3 times and not 2. It was a huge surprise, just showing you how the market reacted the same day. Look at this. Let's take a look at the US dollar again. Let's put it on daily. All right, this is a daily candlestick chart, which means that each candle that you see here represents 1 day. Of course, green candle in this case, because the dollar is the major currency, means that the dollar got stronger, and a red candle means exactly the opposite. Now, going to December 14th, you can see this is right here, this huge green candle. See this? The dollar got stronger since the elections. Trump was elected here. We talked about tax cuts and government spending, right? Since Trump was elected, the whole market is going up like crazy. The dollar got stronger. It was a great time for the Fed to raise interest rate from 0.5% to 0.75. You see the reaction of the market, and you see the reaction of the market today, looking at an hourly chart for the CPI right here. See this? So now, right now, we have a correction, and why is it red? I'm going to explain it in just a second. Okay, so just for you to get a bigger picture, the Federal Reserve uses 2 indicators in order to decide about rates. Now, the first is the jobs report, and the second is the inflation report. All right, the CPI, I'm sorry, affects inflation, of course, because if everything is more expensive, it means that inflation goes up. Which, you know, it's not, if you know Philip curve, if you ever learn economics, it's not such a big thing if inflation goes up, as long as it's balanced with the unemployment rates. So this is why the jobs report is very important. If you know the NFP, the non-farm payroll, the unemployment rate, the wage, the salaries, and so on. This event takes place every first Friday of the month, all right? Every first Friday of the month. in the past 2 or 3 NFPs or job reports, we had some great reports, okay, following Trump's policy. And this inflation report even gives us, you know, another reason it gives the Fed another reason to raise interest rate next time on March 15. So higher inflation supports higher interest rates, okay? We understand why, because if prices go up, interest rate must go up. Rate decisions by the Fed have proven to have a huge influence on the market and the US dollar. I just showed you what happened on December 14th. Actually, all these events are around the interest rate, because a higher interest rate, okay, means, think about it. If interest rate goes up, I would put my money in the bank or non-risk, right, and get cash for that, right? Get more profits. If interest rate goes down, what usually happens is that the stock market goes up. Now, the stock market right now, just for you to see the picture, look at the Dow Jones, all right? The Dow Jones is the index that represents the 30, is the oldest index in the United States, the 30 companies with the highest value in the United States. Look at this, let's put it daily. The highest point ever right now. Look at it monthly. The market was never stronger. You see 2008, prices went down. Right now, the highest point ever. S&P 500, same thing. You look at the Nasdaq, represents the 100 companies with the highest value, technology companies, okay, highest point. So it was a great time to raise interest rate in the United States, and we see that the dollar on a daily chart got stronger following the CPI today as well. So we saw the results. And next page. So a higher CPI number today could support, which it supported, a hike in interest rate on March 15th, all right? We saw the dollar went up. If interest rate goes up, usually the currency is getting stronger, as we said. A higher CPI number today could support, and it was high, could support a hike in interest rate on March 15th, which is great news. Assets to trade will be, of course, the US dollar versus all majors. If you want to trade versus the euro, for example, if it goes down, it means that the dollar is getting stronger because the euro is the major currency, so pay attention. And gold. As I guess most of you know, if you don't know, I'll tell you now, that gold works with an opposite correlation with the US dollar, right? Usually, actually, gold is the parking lot for all currencies. When we don't have when we have a lot of uncertainty on what currency, especially with the US dollar, if we don't have certainty and about what currency to invest, we're gonna put our money on gold, and then you're gonna see this. You see, when the US dollar is getting stronger, gold is getting weaker, and the opposite. All right, so opposite correlation between the two. Great. Okay, traders should take into consideration the testimony by Janet Yellen. Now, Janet Yellen have started to speak about 15 minutes ago. Okay, she you can watch it on Bloomberg Live or on TV or whatever. Now, head of the Fed Reserve, Janet Yellen, testifies today at 3 p.m. GMT time, which it was 15 minutes ago. Market participants will look for more information about interest rate. Right. So what I suggest you should do right now, guys, right now, okay? Open your TV or check on the news and all the big websites. You can check on CNBC.com. You can check on whatever you like, Nasdaq.com. Just listen and take the headlines from this testimony of Janet Yellen to understand what she says according to the CPI results that we had today about the interest rate decision on March 15, which will be the second interest rate decision this year. The first one took place actually in February, the beginning of this month. February 1st, it was the first day of February, and it stayed on 0.75%. But the main reason for that was that there wasn't I don't know if you know, but we have 8 interest rate decision a year, and only 4 with a press conference. Because when we have a press conference, 30 minutes after the hike of or whatever, after interest rate decision, Janet Yellen can explain the moves. All right. So it's very important. The last two times that interest rate went up on December 2015, December 2016, there was a press conference about 30 minutes after the interest rate decision, and it affected the market strongly. So pay attention to what she says. If Yellen hints, all right, that rates will raise fast, the US dollar could receive support. All right, of course, makes sense. Another issue that could be addressed is the Dodd-Frank Act. Now, President Donald Trump said he wants to remove regulation on banks. That's called the Dodd-Frank Act. I don't know if you remember or know. After the big crisis in 2008, all right, the Obama's government have decided to put a lot of regulations on banks. All right, what caused the big crisis? The thing was that banks have decided to give out money very cheap. Okay, the financial situation in the United States was great, and you could take like 120% mortgage on your house. People didn't really have a proof that they can, pay the loans back, the mortgage, and then the banks crashed, and the whole market crashed, and it was a big crisis in the whole world. Of course, the U.S. economy is the biggest in the world and affects the whole world, so it affected the world, economic world strongly. Some of you must probably remember that. Now he talks about remove regulations. Okay, bank stocks have pushed higher in the past 10 days on deregulation expectations because I don't know if you noticed, but since January 20th, when Donald Trump became a president, even if you like it or not, the guy is doing exactly what he said. All right, it's pretty much trustworthy. We're talking about a month, but in the meanwhile, so so the banks got really stronger, right? Bank stocks could be pressed lower if Yellen cools down expectations for deregulation. So just to show you what's going on with the U.S. bank stocks right now, let's put a daily chart. Let's take a look at all the banks. Citigroup, look at Citibank. Bomb, getting stronger. Past 10 days, see each candle represent 1 day because of the deregulation of what Trump is trying to do. Let's look at, choose another one. Whatever, JP Morgan, great. Bomb, goes up. Choose another one. All right, Goldman Sachs, there you go. See, it's going up, great. Guys, I like it that you participate, okay. All right, so, okay, the bank stocks are going up because of all the deregulation stocks on what's going on in the market, about what Trump wants to do. So what I'd like you to do right now is listen to the testimony of Janet Yellen, combine it with you knowing what President Trump wanted to do about the regulation on banks, all right, and understand where the market is going, okay? Educated traders are profitable traders usually. Assets to trade on testimony right now are US dollar versus all majors, okay? US banks such as JP Morgan, Bank of America, Citi, and the rest that I just showed you. Traders should prepare their accounts before both events with support and resistance levels per asset, okay? And of course, good luck. That's the most important thing, right? So when you trade, all right, if you put an hourly chart on Goldman Sachs, okay, you can set some resistance and support lines. Right now we don't have a resistance line because the price is going very high, but put some key levels in order to combine the technical analysis with the fundamental analysis that I just showed you in order to trade. If you want to trade in US dollar, for example, versus euro, of course, if the euro versus the dollar is going down, it means the dollar is getting stronger. Right now, the dollar is getting weaker in the past 2 hours. This is the CPI, it got stronger. Right now, during the testimony, it's getting weaker. You see the dollar versus the Japanese yen is getting weaker. You want to know why? I don't listen to the testimony because I talk with you guys. But let's check the news, right? CNBC, for example. Let's put it on. Let's see what's going on right now. Global stocks head towards record highs after Yellen's comments. All right. So Okay, you can find it here right now live. When stocks are going up, the currency is going down usually. Okay, just to show you live right now what's going on in the market. Pay attention. The dollar is getting weaker, and the US market, the stock market, is getting, let's put it in 30 minutes, is getting stronger, as you can see. All right? Great. Question time. Any question, guys? This is the time. If there's anything you didn't understand, you would like me to clarify, this is the time to ask me, and I'll try to answer all your questions. Go ahead. Thank you. Okay. Let's leave the compliments for later on, all right? Let's talk about, give me some, give me some questions that might help you to be better traders, because that's what we're here for, to make money, right? Yeah, during the CPI, of course, as you can see, the US dollar got, let me show you again, this is not the US dollar. US dollar got stronger, and right now during the test to me is getting weaker. All right, remember, whatever you do, you see we have a support line here. Right now it's on the support line. Let's see if it's going to cross it, and a resistance line here. If we look in a 30-minute chart or 1-hour chart, right now it's on a support level around maybe even lower technically, and the US stock market is getting stronger. Okay, I don't know what she says, I have to check it later, but check on the news. And pay attention to two major things. One is the regulation on banks. You can trade on US banks as well, and the on our MetaTrader probably, as probably know. And the other one is what she says about the expectations for March 15. All right, guys, so I would like to thank you very much. Okay, if you have any questions during the week, you're more than welcome to write me down. You guys on Facebook, join us. All right, join us. Let's trade with iTrader.com. Okay, it's pretty simple. All you have to do is just go here to iTrader.com, open an account, and we're gonna contact you. Okay, as soon as you do that, in order to help you with steps and attach you with an account manager. Okay, with a broker. I'm gonna be here every Wednesday at the same hour talking about the events of the same week. I'd like to thank you very much for participating and wishing you a wonderful week, wonderful day. Thank you, guys.